Let's get now to the other big developing story out of Washington, D.C. The House releasing its antitrust probe into big tech. Kayla Tausche's got the details. Kayla.
Melissa, the House Subcommittee on Antitrust released its long-awaited report into Amazon, Apple, Facebook, and Google after 16 months of investigation. It finds that each company wields a unique type of monopoly power over third-party sellers, over software developers, over social networking competitors, and over the advertising market. Now, counsels for the subcommittee said the emails they obtained from executives describing some of these practices were white-hot documents that proved their case. And they said that it wasn't just customers that were outraged over some of this behavior, but it was businesses also who are operating on some of these platforms, calling it a civil war. The Democrats recommend structural separations, breakups, prohibitions on big mergers and running adjacent businesses, and regulations that limit some of this data collection. But it would take an act of Congress to implement any of this, they acknowledge, and bipartisan support to get both chambers on board. Now, CNBC reached out to all of the companies named in this report for comment. Amazon so far is the only one who has posted any sort of response to this 450-page report. And Amazon says in a blog post that the subcommittee's conclusions were based on fallacies and that the presumption that success can only be the result of anti-competitive behavior is simply wrong. Melissa?
Kayla, thank you. Kayla Tausche. Let's bring in RBC's Mark Mahaney to help us parse through this. Mark, great to have you with us. I don't know if you got a chance to thumb through that 450-page report yourself, but is there anything in this that will finally move the stocks? Because I feel like every headline that has come out threatening a breakup of big technology because of antitrust concerns, stocks just shrug it off.
Well, let's see. No, I haven't had a chance to speed read the 450 pages yet, but we will work on that. And then I will make this point. We've had one of these companies, big tech companies, that's been most under the regulatory spotlight over the last 3 to 4 years. That's Google. And that's the big tech stock I think is most underperformed versus NASDAQ. So there is something here in terms of stock pickers' perspective. There is something here. Regulation is an issue for these stocks. I think Google still remains, the companies I look at, the large cap internet names, probably still faces the greatest regulatory risk for a variety of different reasons. I doubt it's going to be broken up. I'm not at all surprised that this report comes out. I watched all 5 hours of that congressional testimony, and that was a bipartisan critique of big tech by Congress. It wasn't Democrat or Republican, although there were a lot of interesting nuances. It was bipartisan, so I'm not surprised at all that this will come out. This certainly handicaps large acquisitions by any of these companies. I think a spinoff is extremely unlikely. But you will have much greater scrutiny on these names. This has been building up for years. It remains an investment risk.
Hey, Mark, it's Dan. Real quickly here, did the feds, did they just wait too long? Are these companies too big? If you think about, some of the ones in their sites, they're all, north of $1 billion. Facebook, obviously, a little below that. But when you think about the power that these companies have right now, the amount of people that they employ, that sort of thing, did they just wait too long? I mean, are they going to be able to get anything with any teeth?
I think they'll be able to get stuff with teeth. I think they'll be able to. Impact these companies. But this pitch that you're making about they waited too long, and people always go back to this Facebook acquisition of Instagram. Look, when Facebook bought Instagram, and they surprised everybody, even their own shareholders, when they bought that thing. I mean, it was a tiny asset. It would have been impossible for a regulator, I think, at that time to go back and say you can't buy an asset for $1 billion because this could become a 30-year revenue. Nobody could have made that kind of call. So I think some of this, like looking back on old acquisitions and saying we should have stopped those, you can't deal with the facts today. You got to deal with the facts that occurred at the time. I don't see any of the acquisitions that these companies made going back. I'm talking about Google, DoubleClick, Amazon, Whole Foods. None of them, I think, at the time were obviously antitrust. They should have been stopped on antitrust grounds. Whether they have been innovative enough since then to really build up much bigger assets, absolutely. That's what Facebook has done. More power to them. They pulled off a really great acquisition and they built it up over time. I don't think you can go back and unwind those kind of deals. And by the way, I think that'd be bad for business.
The one part of the report, Mark, that I found interesting was that this report says that a player shouldn't control the market in which they compete. So that seemed obviously to point to Amazon being a seller of its own goods in the marketplace it operates. In your view, is this, I mean, if Amazon could not sell its own goods on the Amazon site, what would that do to the company?
Well, I think that'd be a fundamental negative development for Amazon. There's two companies that do this. It's Google and Amazon. They run their marketplaces and then they compete in those marketplaces, advertising and commerce. The odd statistic you want to really think hard about, though, on this Amazon chart is they report every year what percentage, every quarter, what percentage of their unit sales are done by third-party vendors. And that's risen over the last decade. I mean, it used to be 20%. Now it's almost 60% of units sold on the Amazon marketplace are sold by third-party vendors. So Amazon's actually ceded share from first-party to third-party. That statistic you should think about that, is whether Amazon is really tilting the playing field in its advantage, since more and more of the share of those sales is going to third-party vendors. And one last thing to keep in mind, these companies have actually created an enormous ecosystem for small businesses. I think sometimes that's lost. Internet, rev number one back 20 years ago really undermined small businesses, physical small businesses. The internet today and society today is dramatically different. There are millions of businesses that survive and thrive because they can sell on Amazon, because they can advertise on Facebook. I just hope we don't lose that in the debate over how big these companies have become.
Especially during the pandemic, maybe small businesses are using this as a lifeline here to operate. Mark, always good to get your take. We appreciate it. Mark Mahaney of RBC.
Thank you, Melissa.
Jeff Mills, what do you think the impact of this could be? Kayla made it very clear that it would take an act of Congress to enact any laws that could enact any changes suggested by this report.
Yeah, it's something that's been around for a long time, so I think it's probably still a slow burn versus something that's an acute, immediate risk to the stocks. I think you can see the way they're trading after hours off, but not dramatically so. And there are so many what-ifs in the calculation. I think it's really hard to make a clear portfolio decision about what to buy, what to sell today based on this. I just think it's too difficult. I think, by my calculations, my guess is a company like Apple might be least vulnerable from a political standpoint. And I think near term there are some catalysts. 38% of iPhones are in the window of an upgrade cycle over the next 12 to 18 months. This kind of recovery that we were talking about in the previous segment, if you look at consumer confidence and chop it up, it's that top income bracket where the confidence is rising the most. I think 19 points in the most recent reading. So in that regard, it's those consumers that are probably going to continue to buy products like Apple. So I think they're reasonably well positioned. It's a headwind to the space, obviously, just given how they're valued, price to perfection, as they say. But at least that's my take, at least for now.
The one thing I don't get about that last point about Amazon operating the marketplace in which it competes is doesn't that happen with a lot of retailers? I mean, doesn't Walmart operate a marketplace in which it sells its own private label goods, or Costco or Target? I mean, Tim, what are the implications if that is an argument that actually holds up and could be applied to other industries? I think that you can go many, many places in terms of targets.
Well, you could definitely go to Walmart. I mean, that sounds to me about people that are employing practices where they're essentially competing on price and willing to essentially operate at a loss. And look, Walmart has pushed people around on price forever. That's their advantage. Amazon largely was doing that and did not seek to play to a profit. At the end of the day, if I'm investing with Amazon, though, or Apple at this point, I don't think you're running with the devil. I think you have a case where the valuations in the mega cap tech space are really challenging here. That's really what it comes down to. We've all said, we've seen this before. June 2019, we saw these stocks drop 7 or 8% on the first DOJ. And every time we get this, I think the market has become somewhat inured. It's really about who will be the most defensive in mega cap tech over the next 3 to 6 months on the combination of both valuation and maybe less regulatory headlines. And I think it's Microsoft. And I'm not happy to say it, but it's probably also Facebook, who I think it's really about the strength of the small, medium-sized businesses. It's about the economy. I think that's really the future of these companies right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.